Interest rates are part of the business environment. They affect businesses, but businesses cannot affect interest rates. They just have to deal with the circumstances, and we are going to be looking at the circumstances in this little shot. Now, the first thing is definition. An interest rate is just the amount of money paid extra for borrowing money. So it's basically like rent on your money, that you give your money to someone else and they pay you some money for having it. Conversely, if you have some money in savings, people will pay you interest for having your money. So it's how much you've borrowed and a little bit extra. If we look at UK interest rates, we've got the last 10 years here, you can see that today it's 0.75%, and you can see since 2009 it has been very, very low. If we nip back to 2008 when we were sitting at 5%, you can see that interest rates have the ability to change. They are set by the Bank of England on behalf of the UK government, and they do it for broader economic reasons. Businesses cannot control the rate that they pay. We are going to look at how interest rates affect customers. We're going to be looking at how interest rates affect businesses, but we're going to look at the customers first, because clearly they give businesses money. If we think about an individual, they have some income, probably from a job. They have some expenses, their bills, their food, their rent, things like that. And once they've paid that, they have their disposable income, the things that they can decide whether they want to go on holiday, whether they want to eat out, whether they want to buy expensive clothes. So if we look at interest rates, it will affect the income of some people. If you have large amounts of savings, you will receive some interest on that. If you rely on your savings for your income, an increase in interest rates will increase your income, which should therefore increase your disposable income. The sort of people who will tend to have large amounts of savings will be people perhaps who are retired, who've got their savings for their life. If we then think about expenses, if an individual has a large amount of borrowing, such as a mortgage on a house or a large loan or even large credit cards, this could put up their expenses if interest rates are increased. So if my income is fixed, I have a normal job, I have a mortgage and the interest rates goes up, it will cost me more to have that mortgage. Therefore, my disposable income will fall. If my disposable income falls, I will be cutting back on the luxuries, just as I did when I was unemployed. I will be having less holidays, less restaurants, less fancy things. So when you are looking at your business, think about who their customers are. Are they likely to people whose income is going to increase if interest rates goes up, or whose expenses are going to increase if interest rates go up? So how does it affect businesses then? Do interest rates affect businesses? First of all, we need to look at the bottom line. For businesses, revenue, money coming in, minus costs equals profit. So we need to look at these factors and see how an interest rate would affect them. First of all, if we look at revenue, we've just said it depends on the type of customers. If your customer is going to be losing disposable income because of the increase in interest rates, you're likely to lose revenue if you are a luxury product. So if you're a holiday company, your customers borrow money to go on holiday or have large amounts of borrowing, so they have mortgages. Therefore, interest rates go up, your revenue will fall. So you've got to look at your customers, whether they're going to have their disposable income cut, and you're going to have to look at your type of product. Is your product the type of product that will be affected by their drop in disposable income? So that's one aspect we need to look at. The second aspect is costs. Does the business borrow money? If the business borrows money and interest rates have gone up, their costs will have increased. Now, businesses tend to borrow very large amounts of money, so they could have a very large increase in their costs. So when we're looking at businesses, we go, oh, what happened to their revenue? Ah, what happened to their costs? And then we will take a view on what happens to their profit. So interest rates will affect businesses. There is no escaping for that. But you need to look carefully at the circumstances of the individual business in order to take a view on how much it will be affected.